Welcome to Simple Mind Space, the podcast dedicated to helping you master your money and your minds. Today, we're diving deep into the world of finance, demystifying complex concepts like debt, taxes, and investing, and showing you how to build wealth and achieve financial freedom. We'll be joined by two incredible guests, Kenny, a real estate mogul who hasn't paid taxes in over a decade, and Tom, a seasoned investor and entrepreneur. Now, most of us are familiar with the traditional financial system. We earn a paycheck, deposit it into a bank, and maybe see a tiny bit of interest accumulate over time. What we don't often see is the intricate web of investments, loans, and financial instruments that operate behind the scenes, utilizing our hard-earned money. Think of it like this. Every dollar you deposit into a bank isn't just sitting there idly. It becomes a liability for the bank, something they owe back to you with interest. But banks aren't in the business of holding on to money. They're in the business of lending it out. They take your deposits and loan them out to businesses and individuals at a higher interest rate, profiting from the difference. Your money becomes fuel for the entire financial system. This is where the concept of OPM, or other people's money, comes into play. Kenny, a master of leveraging OPM, explains how he uses it to build his real estate empire. He identifies properties with untapped potential, secures funding from investors and banks, and then implements strategic improvements to increase the property's value and cash flow. He explains how he recently acquired a property in Flagstaff, Arizona. The property, while structurally sound, had been neglected by the previous owner. Kenny saw an opportunity to increase its value through strategic renovations and upgrades. He focused on improvements that would directly translate into higher rental income, such as adding in-unit washer dryers, upgrading appliances, and enhancing the property's curb appeal. These strategic improvements, coupled with the natural appreciation of the real estate market, allowed him to refinance the property at a higher value. This is where the magic of debt comes in. Kenny was able to secure a larger loan against the property, effectively getting back his initial investment and then some. This process, known as a cash-out refinance, allowed him to unlock the equity he'd built in the property, providing him with tax-free cash flow to reinvest in new opportunities. Now, before you shy away from the word debt, understand that not all debt is created equal. Kenny emphasizes the importance of good debt used to acquire income-generating assets like real estate. By strategically using debt, Kenny has been able to amplify his returns and build a massive real estate portfolio. But Kenny's success isn't solely about mastering debt. It's about understanding the tax code and leveraging legal deductions and incentives to his advantage. He explains how real estate depreciation, a tax benefit that allows property owners to deduct a portion of the property's value each year to account for wear and tear, has enabled him to legally reduce his tax liability to zero. This isn't about cheating the system. It's about understanding the rules of the game and playing it strategically. The tax code, as complex as it may seem, is filled with incentives designed to encourage investment in specific sectors, including real estate. By aligning his investments with these government-favored activities, Kenny can legally reduce his tax burden and maximize his returns. Tom, drawing parallels to the stock market, emphasizes that every investment, whether it's real estate, a business, or even a stock, is ultimately valued based on its cash flow. Just as a business is valued on its ability to generate profits, an investment property is valued on its ability to generate rental income. Understanding this fundamental principle is key to making sound investment decisions. He contrasts this with speculative investments like non-dividend paying stocks or cryptocurrencies, which don't generate regular cash flow and whose value is primarily driven by market sentiment. While these investments might offer the potential for significant returns, they also carry a higher degree of risk, especially when purchased with borrowed funds. Both Kenny and Tom underscore the importance of building a strong financial foundation based on sound financial principles and a deep understanding of how money works. They emphasize the need for continuous learning, questioning conventional wisdom, and seeking out mentors who can guide you on your financial journey. They also highlight the transformative power of shifting your mindset from that of an employee solely reliant on a paycheck to that of an entrepreneur and investor. actively creating wealth and building a secure financial future. By adopting this abundance mindset, you can break free from the limitations of the traditional financial system and create a life of financial freedom and abundance. We hope this episode has provided you with valuable insights into the world of finance and inspired you to take control of your financial future. Remember, building wealth is a journey, not a destination. Start by educating yourself, surrounding yourself with the right people, and taking those first steps toward building a brighter financial future. Thank you for tuning in to Simple Mind Space. If you enjoyed this episode, please like, share, and subscribe to our channel for more insightful content on mastering your money and your minds. Until next time, keep learning, keep growing, and keep striving for financial freedom.